an occasion where they're finally going to get their wish, and that is a shame.
Michael Alastair Scott.
Thank you, Mr. Chair. I do have a couple of questions for the Minister as well. He will, I'm sure, Mr. Carter, the Minister will stand, and I'm not going to go over the same questions.
Good.
But my question is, why employment? Why, alongside price stability and inflation target, why employment as opposed to, say, GDP or GDP per capita, which the Minister talks a lot about, or the level of where the level of the currency is at a particular time, whether it's against the trade-weighted index or against the US dollar or against the Australian dollar, or the renminbi, for example, our trading partners, or whether it should be something else that is important to the livelihood or the well-being of New Zealanders. But the Minister's chosen employment. And I say, I know why he hasn't chosen GDP or GDP per capita or immigration or any of these other things, and it's because the Reserve Bank Governor can't control those things directly, or even slightly indirectly, because those things are a consequence of a whole lot of other factors. They're a consequence of policy. They're a consequence of business confidence. They're a consequence of global economy and global confidence. So my question is, why employment when employment is full employment, when that factor, that number, is a derivative, like those others, of a whole bunch of other stuff, whether it's employment policy, whether it's industrial relations, whether it's particularly the amount of immigration that we have coming in to New Zealand, that would potentially, for example, a loose immigration policy should see increasing unemployment, a lower employment rate. That hasn't been the case, but one would expect that to be the case, all things being equal. So my question is, why employment instead of all these other things when the Reserve Bank Governor cannot control the rate of employment? It cannot control what an employer is thinking when the employer takes on another employee, because that is what affects the employment rate. The employment rate is only has to be affected by the employer. They're the only ones that can change the employment rate, because they decide on whether to take someone on or not. And as I say, all those things that go through the employer's head before they take on an employee affect employment. The RBNZ and the setting of interest rates is only a slither, a very small fraction of what is in the employer's mind. And so I think I can say that I've demonstrated that employment is not a good measure for the RBNZ to measure itself and we've already talked about, even if it was, and this is not about the conflict that those two things might have, this is just about the fact that employment, in my view, is just an inappropriate measure. An inappropriate measure when particularly we want incomes per capita to rise. Put that in as a target. The second question is, what is full employment? It's already been touched on. David Carter talked about it. What is it? And what happens when, what happens when it gets to 72%? Is the economy necessarily too hot? And do we need to raise interest rates because of that? But that would be a mistake if imported inflation was high, if deflation was occurring in the economy because of lower offshore prices. That would be a mistake. So that demonstrates the conflict that the RBNZ Governor has when measuring those two factors. And we still haven't heard which is more important. Is it price stability and targeted inflation, or is it the employment rate? And I'd be interested to hear from the Minister.
Michael, the Honourable Judith Collins.
Oh, thank you, Mr. Chair. What an excellent choice, might I say. Look, I'd like to